Hi, I'm Elisabeth Dawson, and you're listening to our show, Ways to Love Your Money. Today I'm going to introduce you a guest that I've known for about 15 plus years now, and I hope that you find his information that he wants to talk about today just intriguing and also beneficial to maybe something you didn't know to be true. So Steve Elia began his law career at the age of 19. He was a paralegal, and before obtaining his license 6 years later, Steve founded the Elia Law Firm, APC, in 2001. So since then, he's been very busy. I can't wait to introduce you to him and also welcome you to the show today, Steve.
Thank you, Elisabeth.
Yes, yes. Well, I'm so glad that you took the time to join us and tell us a little bit about your business, your firm, what you do, what you specialize in. But I also want to know the family side of Steve, because I know that you have children, a beautiful wife, and I'd love to hear a little bit about how's life today.
Life today is great.
Yes.
I'm happily married. Yeah. I've got 3 wonderful kids. I've got a 9-year-old boy, and I've got twin girls who keep me busy, and they're 7 years old. So
yes.
Life's busy.
I know. So what kind of sports or things like that are they doing today?
Well, they do, my son plays basketball,
Okay.
my girls do gymnastics, and that's pretty much it. And they've got all other extracurricular activities that they're always involved with.
Well, for me, I just can't believe that your twins are already 7 years of age. I remember when they were born. So
Yeah, I can't either. Time flies.
I know. It does fly. It does
Yeah.
fly. Well, I know that we want to talk a little bit about just different type of business entities, and those are topics that people are looking at a lot because they might be a sole proprietor. They don't necessarily know what they want to do for a business entity. So can you give us a broad brush on the different types of business entities and what people should consider why they should do that?
Sure. So these days I get a lot of calls. I've been in practice now for about 18 years, and about a third of my practice deals with business entity formations, such as corporations and LLCs. There's a lot of other business entities you can form. You can do a sole proprietorship, a general partnership, a limited partnership, but most people are going to call and they're going to say, you know, tell me the difference between a corporation and an LLC, which one is better for me. And those are generally, for small businesses, those are the vehicles and the entities that people are going to form.
Okay. So for simplistic information, what is the easiest entity for someone to kind of navigate through?
Well, it all depends on what you want to do, what your goals are.
Okay.
LLCs are relatively new in California. Corporations have been around for hundreds of years.
Okay.
So LLCs have a lot more flexibility than corporations do.
Okay.
Corporations are generally more rigid. There's a different structure.
Sure.
In a corporation, you've got the shareholders who elect the board of directors, who have day-to-day officers run the company. In an LLC, you've got members or managers or both.
Okay.
And it's just a lot easier. It's a lot more flexible. You could, you know, there's not as many restrictions on LLCs.
Well, it's interesting to know because people have questions about these things. They don't know what, entity formation they should do. And there's a lot of benefits to having a corporation as well. I know that, we want to talk about the legal side with you, but talk to me a little bit about the liability protection.
Sure. So when people call me, they call me for 2 reasons. Either their CPA said, hey, you should incorporate or form an LLC. So the first reason is the tax advantages.
Okay.
And I think that's better left to a CPA or someone that knows your particular situation. So I'd be happy to talk to you about the limited liability protection.
Okay.
And so I brought my corporation.
I think that's
my
great.
Corporation, and this is a person under the law. Believe it or not, this is a person. Not like you and I. It's not a natural person, but this is a person. So this book employs me. It employs 6 other employees I have. It owns all the assets in my company, in my law firm, the desk, the computer system, the servers, all that. And this is the employer under the law. I work for this book. It just so happens that I'm the sole shareholder and officer and director. I take that back. I have a partner now. So
you do?
Always my partner.
Oh,
so
okay,
I'm used
great.
to saying that, but so this is my corporation here. And when you form a corporation, you get this corporate veil. It's like a shield. It's like when you get married, you've got the veil. So you've got this shield that protects you from lawsuits and personal liability. And of course, we live in California, the most litigious state in the union. So in my opinion, whatever business you're going to do, it's my recommendation that you form an entity, either a corporation or LLC, because you get the limited liability. And I'll explain to you how it gives you limited liability. If you think of this book as a person, okay?
For the first time ever.
Yes. So this is a person, and it pays taxes, it owns businesses, and it could pretty much do what you and I could do. So under California law, it's a separate entity. It's not me. It's a person. because this is a separate and distinct person, I'm going
Okay.
to give you an example of how it could protect you.
Okay.
Let me give you a hypothetical. Let's say, and I do this all the time, I send my receptionist to the courthouse to file documents.
Okay.
Let's say she gets in a car accident, a real bad wreck, and she kills somebody.
Mm-hmm.
Well, she did it. She's the tortfeasor is what they call it, so she'd be on the hook.
Okay.
But then under California law, because she was in the course and scope of her employment, her employer would be on the hook. So the question is, who do you think employs my receptionist?
It's the person.
It's the person. It's not me. Now,
Okay.
if I did not have this corporation, I'd be the employer if I was a
Okay.
sole proprietorship, and then she would get sued, and then
They
I
go
would
after
get
your
sued.
personal assets and things of that nature.
Exactly.
correct? Okay.
So this person here owns the desk and the assets in my office, but this person does not own my home.
Okay.
It doesn't own my bank accounts. It doesn't
Okay.
own my investment properties that are
Okay.
titled in an LLC.
Okay.
So if there's a lawsuit that comes and they sue my receptionist and they sue this book, they can go after the assets of this book, but I'm shielded personally.
Okay.
So that's one of the ways, if you can just look at this book as a person, separate and apart from yourself, that's how you get the limited liability protection.
Well, you're talking about something I think is so important. It's that liability protection over your personal assets. And there's so many people out there today that they've been running with a sole proprietorship for so many years. Doctors, real estate agents, just all these different types of business entities, and they're not doing it through a corporation. They're doing it as a sole proprietor, but they're exposed to so much. So talking to those people right now, what would you say really should be their call to action to make sure that they're protecting everything?
I would definitely form some type of legal entity.
Okay.
And the reason is that, I understand why they don't have it. They've probably never been sued. Most people have never been sued before. But if you
Okay.
get sued one time, all it
All
takes
it
is
takes
just that
once,
one time.
yeah.
And then now you've got this big problem.
Sure.
And I've gotten many, many clients over the years out of multi-million-dollar judgments because they've had a corporation.
Wow.
So
Okay.
I think it's the most important thing you do. I mean, you got to have business insurance.
Right.
But business insurance is not going to cover every one of your claims. There's going to be
Okay.
certain claims that are not covered by insurance. So that's where the corporation comes in. It gives you
Okay.
that extra protection.
All right.
So I think that's invaluable. I
And
think,
that goes the same way, whether it's a C corporation, an S corporation, or an LLC?
yes, it does.
Okay.
And the reason is under California law, I mean, if you're a C or an S corporation is a distinction for the IRS
Okay.
in terms of taxation.
Okay.
The C corp, when a corporation is formed, it starts as a C corporation, and then you can elect to become an S corporation. But under the law, under liability laws, it's identical. And the LLC laws are similar, but with an LLC, there's one important distinction is
Okay.
there's less formalities.
Oh.
So you don't have to have minutes in an LLC like you do with a corporation.
Okay.
And a lot of people won't do their annual minutes. And that's another thing I'd like to talk to you about is some of the potential pitfalls
Okay.
of where you can run into some trouble.
Okay.
And you remember I told you got a shield, right? Well, the shield's not 100%.
Okay. What makes it not 100%?
There's several factors. So I'm
Okay.
going to go over some of the most important ones that the court's going to look at. And I've litigated these cases before, so I speak from experience. And a lot of my practice deals with civil litigation. So
Sure.
number one, a court's going to look to see if this is a real company or if it's kind of a sham.
Okay.
And if you're committing fraud, then forget about it. There's no judge in America that's going to give you the shield. So that's not number one. If you're committing fraud, you got some problems. But number two is, and people do this all the time, is they commingle their assets. And I tell them, I say, when you form a corporation, treat it as a real company, separate and apart from your personal assets. So
Right.
don't pay your home mortgage out of your corporation or your other personal expenses.
Don't
So
pay your mortgage
Keep
out of
your
your
business
corporation. Okay.
expenses separate from your personal expenses. All
Sure.
business expenses get paid out of the corporation. All separate gets paid out of your personal accounts.
Okay.
Do not commingle the two, because
Right.
what will happen is in a lawsuit.
I think it's important to say because there's so many people out there that do commingle. Maybe they just don't have the formidable knowledge to know any way, any different way.
Right.
But they think that I've seen this where I've kind of reviewed, cash flow analysis, if you will, and they're out of the business account, they're taking all these personal things to pay for life, and
Yeah, and it
it's
happens
not
all the
it's
time.
not the way to do it.
Yeah. Now, when you get sued, the lawyer suing you is going to try to pierce the corporate veil because chances are maybe the corporation doesn't have enough assets
Yeah.
for the creditor.
Okay.
So what they're going to do is they're going to request to produce and they might get your bank documents. And if they
Yes.
get your bank documents and they see that you've been paying your personal expenses out of your corporation,
Okay.
that's a factor that they're going to argue to the judge that
Okay.
the shield should be set aside because it's not a real company. Real companies don't do that. Okay, so that's one of the factors. Another factor is not having your minutes.
Yeah.
That's a big deal. Some people incorporate 15 years go by and they never have minutes, and the corporation's code says that the shareholders have to meet at least once a year to pick a board of directors, and people don't do that. So that's problematic too. Another thing is a lot of people incorporate on the internet because it's cheap. Okay, and then what happens is some of these companies will send you 50 pages of boilerplate forms, and then you've got to fill in the blanks. And in 18 years, every time I've seen one of these companies, I've never once seen them filled out ever.
Really?
So what happens is there's a lawsuit, then they do a request for production of documents that you produce any and all your corporate records, and then you give them blanks. Now they go to the judge and say, Your Honor, this is not a real company.
Right.
Well,
it's interesting that you say that. It's interesting that you say that because we're in such a, what I call DIY life today.
Yeah.
And people want to do everything themselves, but you can't replace great legal advice. It's great professional advice and actually a great structure. So if that's a person, right, or it's its own entity, it's that person, it doesn't eat or sleep or drink or anything like that, but it controls so much, and that protection from litigation and, let's say even creditors, if, certain things that were to occur. How do you really protect what you're working so hard for? And how do you also protect, like you said, you have employees. I have employees. How do we protect our employees,
exactly.
In the event that something were to occur? So it's about being more mindful about how important your legal structure really is. It's so different than just going and saying, okay, ABC, I'll take that one, and then spit out a bunch of papers, and then they don't follow the rules.
Right. And, they get you and they say incorporate for $100, and then by the time you check all the boxes that you've got to do, it's about a $500 difference. In terms of price to going to a real lawyer who's going to sit with you and say, okay, tell me what you're doing, and analyze everything. And then, my office, we do everything from A to Z. And the one, everything is scanned, and we have a record of everything. We carry malpractice insurance if we make a mistake. It's never been used. Knock on wood. But that's important. You can't replace that with just generated forms. I've had clients that. They went through these internet companies and they did an LLC where they were supposed to do a corporation and vice versa. And that's because they didn't talk to somebody and they didn't get the good advice. And I think that's irreplaceable and invaluable.
Yeah. I mean, it's such a powerful message, and I think for so many people, they just don't even know what to do. First, they need to, have a call to action for themselves to say, I need to find a professional like you so that they can get the right advice. And then have their entity, have their person, if you will, completed the right way. There's so many different I's to dot and T's to cross, right?
Oh, yeah.
And this is just as important as an estate plan if you're doing something for your home and your life and your family. But it also gives control to the next person that maybe could actually step into your business in the event that something happened to you too, correct?
It does, and I'm glad that's a good point that you raise. There's other benefits to incorporating. One of them is that, people die.
Yes.
But this book won't die unless I kill it, okay, by filing, dissolution paperwork with the Secretary of State. So, just a few months ago, I had a client die, and the bank found out, and they froze the accounts because he was dead. And I was able to show that the business was in a corporation, and they, opened it back up. Now, if we didn't have that would have went through the probate process, and it could have taken months. And
that's an amazing statement, because I think people think, oh gosh, I don't have to do that. I don't need to do anything, or everything will be fine, and my spouse will be able to take over it, or my best friend will still be able to run the business. No, if you don't have a business entity, it's going to shut down. But if you have an entity that is pretty much still living, then it allows, if you give it instruction and direction and control, to have someone come in and still run the business so it's not completely gone.
That's right. That's right.
I think that's powerful. Well, Steve, I want to thank you so much for being part of the show.
Sure.
It's a pleasure to have you.
Thanks for having me. I appreciate
it. Just grateful for all of our years of friendship and professional relationship too. And people are so valued when they come through the work that you do for them. So I'm sure that there's a lot of people listening today that have that appreciation for you. So I'm very thankful for your time.
Thank you, Elisabeth. I appreciate you bringing me on.
So what I want to do is I want to kind of finish up this conversation that Steve and I just had, and it's so powerful to know that there's something more than just doing a sole proprietorship or being 1099 for your income. You want to basically cover your liabilities and cover your, everything that you're working so hard for that's such a passion to you, because you want to make sure that things are in the right place. Now, think about this. If you're a sole proprietor out there, and you have been for a really long time, and you don't really have the liability protection, or you don't have certain steps in your process to make sure you're keeping your corporation in line, if you're not doing your minutes each year, could your corporate veil be, could it be pierced? And the most important thing I think I take from this as well is you want your business to take over still when you're no longer here, and have a game plan for that. Because if you think that you've got one and you don't know this for sure, who would come in and step in to take care of your business, and would they be able to? Or would the courts freeze your accounts and freeze all of your assets within the business entity itself and go through a probate situation, which is definitely not what you wanted. And if you have a surviving spouse that's still out there, or you have children, if they can't go in there and touch these things, then you need to make the adjustment. So you need to find a professional. Again, if you have more questions for Steve Elia, please email your questions to me at questions with an S at Elisabeth with an S, Dawson.com. We will get you his information as well. You're welcome to call us as well at 619-640-2622, and we'll have a conversation with you about what you're thinking about right now. But even if you have been in business for 30 years and haven't done anything about it, and you're still running your business like a sole proprietor, like I know a bunch of you are, there's still time to make those changes, and just so that you have a better handle on what your business is doing. Because especially if you're responsible for employees or a family that doesn't necessarily know how to run your business, you owe it to them to make sure that your business entity is protected. So again, thanks for tuning in. We look forward to having you again listen to our shows in the future, and stay tuned, because we'll be having a couple other pieces that we're going to talk about today. All right, take care. Hi, I'm Elisabeth Dawson, and you're listening to our show, Ways to Love Your Money. To our podcast listeners out there, if you would like to receive this high net worth risk analysis that we keep talking about and learn how you could specifically benefit from these strategies, call to schedule a private high net worth analysis directly with us at 619-640-2622. There's no cost for this analysis to our first 10 callers, and chances are we're going to talk about things you've never talked about before. So again, call us at 619-640-2622 to schedule your complimentary appointment. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.